Hello, I'm James Foote, Head of Capital Markets and Asset Allocation for the Asia Pacific region. Following some recent research by the team, I'm here to discuss the unique nature of the market landscape, as well as some of the sensible actions that we believe can empower investor success. First, let's establish a clear observation about the current state of markets. You can see from this chart that the sudden crash and rebound in stocks in 2020 has not been consistent across markets. This divergence has actually covered the full spectrum of developed and emerging markets, and perhaps most notably, global and regional sectors. For example, many will be all too familiar with the spectacular rise of US technology against a backdrop of a global recession. Some will also appreciate that the divergence goes even deeper than that, with the lag in energy and financials impacting the likes of the UK. Please don't underestimate the importance of this divergence. When positioning portfolios, we look at this market bifurcation as an opportunity to add value. To highlight how Morningstar Investment Management navigates these periods, the margin of superiority is one tool that we use to demonstrate the extent of the opportunities ahead of us. To quickly explain, this chart looks at the difference between the highest ranking sectors on our analysis versus the lowest ranking. To calculate this, we first determine the expected return for the most attractive 20% of global and regional sectors, so those with the best expected return. We then calculate the expected return for the bottom 20% of global and regional sectors, so those with the worst expected return. The line on this chart then shows the difference between the two, the spread. When the expected return for all assets are similar, we see a low margin of superiority, like we saw in 2013 and more recently in early 2019. However, today, we're seeing the highest margin of superiority on record, with a significant gap between our highest and lowest ranking sectors, exceeding levels seen in the Chinese growth scare in early 2016 and the financial crisis of 2008. Looking back further using our backtest, you can see that we're at the highest level of dispersion since at least the end of 2004. And this could become the big talking point for years to come. To be clear, this is an opportunity to favour unloved markets that have high return expectations and sidestep those that rank poorly. It also means our portfolios will include higher allocations to attractive assets. Taken together, we have every reason to believe that investor success is ahead of us. We'll continue to drive this forward in earnest. Thanks for your time.
Advice in this video is general advice prepared by Morningstar without reference to your objectives, financial situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.